While everyone's chasing meme coins and arguing about Bitcoin ETFs, there's a play happening in plain sight that could reshape sovereign debt markets. Ripple's CTO just stepped down. The herd thinks it's bearish. They're wrong. And expensive wrong. David Schwartz leaving his operational role at Ripple isn't weakness. It's the final phase before institutionalization. And if you don't understand why that matters, you're about to get educated the hard way. The US is staring down $40 trillion in debt by decade's end. That's not speculation. That's Congressional Budget Office data. Meanwhile, Ripple controls 42% of XRP's total supply through escrow. That's one of the largest concentrated asset positions in digital finance, period. So what happens when liquidity dies and governments need new collateral instruments? The idea that XRP could address the US national debt is often dismissed, but it's worth exploring. The US debt is projected to surpass $40 trillion by the decade's end, while Ripple controls 40 to 45% of XRP's total supply through escrow. This concentration has led to speculation. What if Ripple transferred 30 to 40 billion XRP to the US Treasury? For this to work, the price of XRP would need to rise significantly. Covering $40 trillion with 40 billion XRP requires a price closer to $1,000 per coin, a thousand-fold increase from current levels. This price appreciation hinges on XRP becoming embedded in global finance, with Ripple's partnerships with Franklin Templeton and DBS Bank being early steps. Even then, it is critical to clarify what debt management actually means in practice. The US does not pay off its national debt in absolute terms. It rolls it over through Treasury issuance. The relevant question is not whether XRP can erase trillions of dollars, but whether it could function as a new form of collateral that strengthens the Treasury's position in global markets. If XRP gains status as a reserve asset, similar to the role gold once played or the way US treasuries dominate today, the government could potentially use it to backstop borrowing, reduce financing costs, or even collateralize new forms of digital debt instruments. That would not eliminate the debt, but it could subtly alter the structure of global credit markets. At the heart of this tale lies Ripple's strategic management of its XRP holdings through a meticulously designed escrow system. As of mid-2025, Ripple controls with about 35.9 billion XRP locked in escrow accounts, releasing 1 billion XRP monthly to maintain market stability and investor confidence. This controlled release mechanism has been instrumental in preventing market flooding and ensuring a predictable supply of XRP. However, this concentration of control has not been without its critics. Concerns about centralization have been raised, especially given Ripple's significant influence over the XRP supply. Some have suggested that Ripple could consider transferring a portion of its escrowed XRP, say 35 to 40%, to the US Treasury. Such a move could address decentralization concerns by distributing XRP holdings more broadly, potentially enhancing trust and legitimacy in the eyes of regulators and the public. This proposal, while speculative, underscores a pivotal moment in Ripple's journey. The company is at a crossroads, where strategic decisions could redefine its role in the global financial ecosystem. With this in mind, Ripple's leadership transition marks the beginning of a new phase in its journey. On September 30th, 2025, David Schwartz announced his transition from Chief Technology Officer to CTO Emeritus and board member. While this may seem like a simple personnel change, it's part of a well-planned strategy. Schwartz will continue running his XRPL node, publishing technical commentary, and exploring new use cases, but now from a strategic rather than operational role. This timing is crucial as Ripple pushes RLUSD into the market under Deloitte's attestation and runs tokenization pilots with DBS Bank and Franklin Templeton. The company signals its maturity. Schwartz's shift to a strategic role reinforces this message, showing that Ripple is ready for institutional adoption with strong technical leadership, stability, and governance. It's not a retreat, but a deliberate transition from inventor to institutional guide, ensuring continuity while preparing Ripple for the next phase. Here is where we need to go deeper. There are signs that this transition is part of a broader strategy. First, the decentralization of technical governance has shifted responsibility from a single CTO to the XRP Ledger Foundation and validator community, reflecting the ledger's growth beyond one person. Second, institutional tokenization is moving from theory to execution. Franklin Templeton is issuing SG Benji, a tokenized money market fund, on XRP Ledger. DBS is planning to allow it to be traded and even used as collateral. When you combine that with RLUSD, you get a closed loop, stable liquidity, yield-bearing assets, and on-chain credit mechanics. That loop requires stability more than it requires a single technologist. Third, the Deloitte attestation is not a publicity stunt. If you have ever worked inside finance, you know what it means when a Big Four firm signs its name on a stablecoin's reserves. It is a compliance signal. It says to cautious institutions, you can touch this product without fear that tomorrow it collapses. That is Ripple building credibility with the only audience that ultimately matters: institutional money. Finally, the rapid development of AMM modules, escrow upgrades, and decentralized exchange features shows that Ripple's engineering team is larger and deeper, making the CGO emeritus role a natural progression. Now, while we're diving deep into these high-stakes financial discussions, let me introduce Unich, the platform that's changing the game in crypto trading. Unich's OTC exchange has already processed over $1.2 billion in OTC trading volume, giving both buyers and sellers the flexibility they need. With over 5 million active users and 500K plus followers on X, it's a platform built for scale. Disclaimer: this is not financial advice. Please conduct your own research before making any investment decisions. Ripple has partnered with Ondo Finance to bring the OUSG token onto the XRP Ledger. The OUSG token represents ownership in a portfolio of short-term US Treasuries backed by BlackRock's BUIDL fund, with over $690 million in total value locked (TVL). This collaboration allows for 24/7 minting and redemption of the token using Ripple's RLUSG stablecoin, enhancing liquidity and enabling faster, compliant access to US government debt without the limitations of banking hours. In addition, Ripple is collaborating with Guggenheim Treasury Services to launch tokenized US Treasuries on XRPL. The project leverages the speed, low fees, and decentralized exchange capabilities of XRPL to transform the fixed income market. This move signals Ripple's ambition to make XRPL the institutional backbone for tokenized real-world assets, starting with US debt. With Ripple investing $10 million into tokenized T-bills, the company is positioning XRPL as a key infrastructure in the evolving digital finance landscape. The recent resolution of its legal battle with the U.S. Securities and Exchange Commission, SEC, which had accused Ripple of selling unregistered securities through XRP, has cleared a significant regulatory hurdle. With the SEC's case now concluded, Ripple is poised to focus on expanding the adoption of XRP, and the XRP Ledger price now lives in the interplay of liquidity depth, volatility regimes, and systemic correlation. Despite the announcement, the order books held up. Recent reports show the XRPL decentralized exchange liquidity surged from about $14 billion to $24.6 billion in just a month, a 75% increase in USD terms, evidence that fresh capital is entering the market, not fleeing. So what does this portend for price over the next 3 to 6 months? Price won't break out simply because a leader changes roles. It will move when execution validates narrative. In a base case scenario, XRP may consolidate in the $3 to $3.50 band, as markets watch quietly for signals. If tokenized funds on XRPL gain real liquidity or RLUSD sees institutional flows, XRP could rally toward $4 to $6. As Ripple moves forward with a new leadership direction and a clear regulatory path ahead, other players in the crypto space are also making bold moves. Unich has partnered with Kima Network, GT Protocol, Script Network, and more, positioning itself as a key player in the evolving world of crypto. And don't forget, Unich's IDO is live. UN tokens at a low FDV, backed by a legal entity with a referral reward system. Plus, NFT perks for early adopters. This is not financial advice, but if you want to explore more, check the link in the description. The transition of David Schwartz from CTO to board-level strategist marks more than a personal career shift. It signals Ripple's evolution into a financial technology company built for institutional scale. His move strengthens governance, reassuring banks and regulators that Ripple is prioritizing stability over dependence on a single technologist. The muted market reaction highlights a deeper truth. XRP has matured beyond personalities, supported by global engineers, validators, and the XRP Ledger Foundation. The real trajectory now lies not in speculation, but in utility, settlement, liquidity, and tokenized collateral. As treasuries and funds go live on XRPL, organic demand for XRP could emerge from real-world use cases. Execution remains critical, from RLUSD adoption to tokenization pilots. This is opinion, not financial advice. Do your own research before investing. In the end, the question is not if XRP integrates into global finance, but how well. Subscribe to Wealthy Wise and drop your thoughts in the comments.